So I kind of gave up my career about 8 years ago to allow her to follow and build off of her career. And I went into full-time real estate investment and
That's
property
awesome.
management.
So
So,
do you utilize the lease to own option a lot now because that's
okay.
kind of how you got started?
So it's super interesting. And I started in 2002 with that first lease. I actually took it over and bought it in 2004. The market crashed in 2008, but I moved for work um, from the state that I was in to a neighboring state. And I purchased a foreclosure property that was purchased by an investor who bought up a whole bunch of brand new houses that had just been built in 2005. And he did the little to no money down. Basically, he only put about 25% down as an investment loan. And when the market crashed, he lost about 50% of the value on the properties.
Wow. Yeah.
So he basically short sold the properties, and that was the second property that I purchased. So I walked into that property knowing that it had just been built, and I had a little bit of real estate experience, but I purchased that property just putting 20% down.
Wow.
But because it was a short sale, it was basically the bank has approved the property to be sold at a very low amount compared to what the original loan was. But it was enough that he squeaked away from it with only getting about $20,000 to the bank to get out from under the loan entirely after it sold. But I knew walking into the property because it was like a model home for the builder. They put upgrades into it, so I walked into the property knowing that there were about $40,000 to $50,000 worth of upgrades on the property.
Oh, wow.
That I knew that if I held it long enough, it wouldn't matter what the market was doing in 2008. So I got into that, and I house hacked that by having my roommates from work, from the new job that I had just gotten in a new state. Basically, I lived in that house for free, and I just chunked the mortgage down, doubling to tripling what the mortgage payment was. And we paid that property off in 2015. So it took 7 years to pay that off.
And are you going into equity? Are you pulling out equity to purchase more properties, or?
Okay, so I'll get to that in a minute. So my wife took a job, and we moved halfway across the country from where we were. And they gave her an equity offer. And this is like, we both had 401ks. I was solid contributing to it. And I set her up to do literally maxing it out, because where we were living, the rent was obviously, we all lived together in that property for a while, and it was super cheap for us, almost non-existent in actual cost. Just utilities were literally what we were paying. So when the opportunity came up, I left my job and we pursued this avenue with an equity option. And in 2015, we paid off the other property, but we moved in 2012. So I rented that house out to the people who were literally there, and they're still in the property now. But when we moved, we took an equity option that I don't know that I necessarily understood what was going to happen, but the company ended up being really successful in getting sold.
Wow.
And in December of 2015, those options that we had just literally been given a couple years beforehand, all of a sudden actually had real stock value.
Yeah.
And part of it was immediately cashed out, and then part of it was doled out in the new company's shares. So that leads into one of my questions for you, is going to be like, we now have this ridiculous nest egg that we didn't have before in stock in a company that unfortunately is super downtrodden in the market right now due to the political ambiguity that's kind of up in the air with our current, American political leaders. So that stock is, to me, it's beat up. And I read, the Morningstar reports. I read, Seeking Alpha because of your channel and Joseph Carlson, and PPC Ian kind of leading me into actually digging into the stocks that I want to own and stuff like that.
Mhm.
But everyone says that the stock is undervalued by like 30 to 40%. And I believe it is as well. The problem for me is that it pays almost a really pathetic dividend, which I really want to be a dividend investor. And that's kind of where my mindset is that I want dividend growth over the years that we're going to be working, because we're a little bit older. We're 40, and we don't want to work for the next 25 years. And we would like to retire within the next 10 to 15 years and have a really comfortable living experience. So when the payout happened in 2015, we took a chunk of that and we bought another condominium in the same area in part of the world that I already had one in, because I knew that market, and it had done really, really well for me over 10 years prior. So we bought that outright with no mortgage on it. And they're not expensive. They're what I would call below the median housing for the United States. So we bought that's the third property that we had. And we paid off the house. And I realized that I had a huge learning mistake in paying it off, because investment properties give you tangible benefits to your tax bracket when we are now in a much higher income bracket than we've ever been before. And we pay like 40% or more in taxes.
Wow. So you're living in not only
we're living in a high tax state in a higher tax bracket now than either one of us have ever been.
Okay.
And we try to pull that down, but I do all of my work. I don't have like a traditional 401k I can contribute to anymore. I am this past year, as of 2018, I started doing the backdoor Roth IRA. So I'm trying to get that all rolled over and converted properly, and learning that process, just because of the tax brackets that we're in. I don't know if our income is always going to be this, but it has been this for the past like 3 years.
Wow.
So it's not having a whole bunch of
problem to be in, man. Tough problem. I mean, it's a good problem to be having.
It's a great problem to have, but no one in my family has ever had money, and my parents were not financially literate at all. Always living paycheck to paycheck, always buying cars that they couldn't afford. Like my grandfather made fun of my mother all the time, saying that she lived a champagne lifestyle on a beer budget.
Yeah. My parents called it something different. Well, people in my family have called it different name, but very similar. Yeah.
So ultimately, we have that stock, and that's all vested now, and we've obviously had that for more than the 1 year. So if we sold it, we would only be paying the capital gains tax. Mm-hmm. However, if we sold it or did anything with it right now, we would also pay heavily state income side as well. So we pay tax there, then pay federal. And because of the way the market is right now, I don't really want to take out anything from that. However, what I did this year was I realized the mistake that I had kind of made by paying off the properties and not just holding the mortgage to use that on an investment property. We would get to reduce our taxable income for the property taxes, all the expenses for it, any maintenance, repairs, all of that stuff. It all reduces our income. So I talked with my CPA this past year in April, and I was like, we're at the point where we could do a cash out refinance, and it's an investment property with an investment loan. And if I paid down the interest rate by buying a point off of it to get it at 4.5%. And then I pulled out more from the property than we ever put into it, by about $30,000 over what we paid for the property originally. So I had this bundle of money, and I've just been rolling a huge chunk of it into stock, because I'm shopping for the next property, but I knew that I was not going to spend the total amount of money on that on one property.